What happens if tomorrow Bitcoin drops to zero? Not by 10%, not by 90%, but disappears completely. Exchanges will freeze, wallets will reset to zero, and digital gold will turn into the number zero. Today we'll break down what will happen to markets, banks, and governments if the world's largest cryptocurrency vanishes. Why Bitcoin's collapse will hit not just investors, but all trust in money itself. And why this has happened before, just in a different form. Friends, I'm really curious. What corner of the world are you from, and what time is it for you right now? Write in the comments, hit the like button if you enjoy watching stories about money and power, and get comfortable. We're starting. Chapter 1. The day the numbers disappeared. Imagine a Monday morning. You open your phone, log into the exchange, and see zeros everywhere. Bitcoin is worth $0, 0 cents. You refresh the page, zero again. You switch to another exchange, same thing. At first you think it's an error, a system glitch, a technical bug. But 5 minutes later, news feeds explode with headlines. Bitcoin crashed, crypto market zeroed out, digital gold turned to dust. And you realize, this is reality. In the first hours, chaos erupts. Exchanges around the world try to halt trading, but the flood of sell orders crashes the servers. People try to withdraw anything they can, but the system freezes. Those who held Bitcoins in wallets stare at their screens and don't know what to do. The numbers on their accounts are still there, but these numbers mean nothing anymore. One Bitcoin yesterday was worth a new car. Today, it's worth less than a cup of coffee. By midday, it's worth absolutely nothing. This isn't just a price drop. This is a complete disappearance of value. News channels work non-stop. Experts go on air and try to explain what's happening. Someone talks about a system hack, someone about mass selling by major players, someone about government bans. But nobody knows for sure. The only thing that's clear, trust in Bitcoin evaporated instantly. And with it, a huge portion of global wealth evaporated. Because Bitcoin isn't just currency for computer geeks, it's an asset worth trillions of dollars. It's part of pension funds, corporate balance sheets, personal savings of millions of people worldwide. Crypto exchanges collapse first. The largest platforms, through which billions of dollars flow every day, simply stop. They block withdrawals to prevent panic, but panic is already here. People storm customer support, write thousands of messages, demand explanations. Nobody responds, because there's nothing to say. Exchanges lose liquidity instantly. Those who stored funds on these platforms realize their money is frozen, maybe forever. It's like a banking crisis, only without lines at banks. Everything happens in digital space, quietly and quickly. Then the wave reaches the stock market. Shares of companies holding Bitcoin on their balance sheets drop within minutes. There are corporations that invested hundreds of millions in cryptocurrency. Now these assets have turned into nothing. Their financial statements instantly devalue. Investors sell shares of these companies because nobody knows if they'll survive. Tech giants that accepted Bitcoin as payment urgently publish statements. They say their business doesn't depend on cryptocurrencies. But the market doesn't believe them. Because if Bitcoin can drop to zero, then what else can? Banks issue official comments. They say, "We have no direct relationship with cryptocurrencies. Our assets are safe." But this is only half the truth. Many banks issued loans backed by cryptocurrency. Many invested in Bitcoin-related funds. Many serviced crypto exchanges and took commissions for it. Now these connections turn into problems. Loans backed by Bitcoin become unsecured. Borrowers can't repay. Funds close. And even major banks begin to feel pressure. Their shares also drop, though not as sharply. But the hardest hit comes to so-called stablecoins. These are cryptocurrencies that should be pegged to the dollar. One stablecoin equals $1. That's the theory. But in practice, Their value depends on trust in the system. And when Bitcoin drops to zero, this trust evaporates. People begin massively selling stablecoins, trying to withdraw real dollars. But reserves aren't enough for everyone. The price of stablecoins begins sliding down. A dollar no longer equals a dollar in the digital world. And this creates a new wave of panic. Because if even the anchor doesn't hold, what can you rely on? Companies working in financial technology lose positions in one day. Startups that built services around cryptocurrencies simply shut down. Thousands of people lose jobs. Investors lose billions invested. Entire industries that seemed promising just yesterday look like a bubble that burst today. And this isn't just an economic blow. It's a blow to the vision of the future. Because cryptocurrencies promised a new world. A world where intermediaries aren't needed, where money belongs to people, not banks. Now this promise is shattered. By evening of the first day, global markets lose trillions of dollars. Indexes drop by dozens of %. Investors in panic sell everything, not just crypto, but stocks, bonds, even gold. Because when something in one day, now people ask a question that seemed absurd before. What actually gives money value? If Bitcoin, which was held by millions trust and protected by complex mathematics, can drop to zero, then what? Can the dollar be zeroed? Can gold lose meaning? Can any form of money simply disappear if people stop believing in it? These questions sound in the news, in blogs, in kitchen conversations. And there's no answer. Because money is always belief. Belief that tomorrow someone will accept a piece of paper, a coin, or a number in exchange for bread, gas, work. Bitcoin was an attempt to anchor this belief in code. But code proved powerless against human fear. The world will understand that it wasn't the price that collapsed. It was faith that collapsed, in numbers, in freedom, and in the promise that code is always stronger than humans. Chapter 2. When Faith Breaks. But any faith, even digital, rests on an old principle: trust. And trust doesn't disappear at the moment of collapse, but at the moment of doubt. Let's rewind time. Look at how this could have started. Bitcoin doesn't fall to zero instantly. First, doubts appear. Maybe news breaks about a major hack. Maybe a large country's government declares a total ban. Maybe it turns out that the biggest exchanges manipulated prices for years. It doesn't matter what exactly. What matters? People start doubting. And when doubt appears, selling begins. First big players sell, then medium ones, then everyone. The price falls slowly, then faster, then catastrophically. At this stage, many think, this is temporary. Bitcoin has fallen before. It will recover. They hold their coins. They believe in the technology. But each day the price goes lower. And then comes the critical moment. Liquidity disappears. Liquidity is the ability to sell an asset quickly at a fair price. When it's gone, the market turns into a trap. You want to sell, but there are no buyers. You lower the price, but still nobody buys. Because everyone is selling, and when everyone sells simultaneously, the price falls to zero. Because zero is the point where the desire to sell meets the complete absence of desire to buy. Exchanges see what's happening. They understand. If they don't stop withdrawals, they'll go bankrupt within hours, so they close withdrawals. Officially, it's called technical maintenance or preventive security measures. In reality, it's a panicked attempt to preserve something. But this action only accelerates the collapse. Because if people can't get their money, they understand. The system has broken. And then panic turns into mass rejection. People no longer want anything to do with cryptocurrencies. They're ready to lose everything, just to get out. But there's nowhere to exit. And so Bitcoin falls to zero. And with it, the entire connected ecosystem collapses. Because the cryptocurrency world is built like a pyramid. At the foundation, Bitcoin. On it rest other coins, platforms, services, projects. When the foundation disappears, everything else crumbles. Take so-called altcoins, all other cryptocurrencies. If Bitcoin falls to zero, they fall even faster, because their value was always measured relative to Bitcoin. If the main coin is worthless, what are the others worth? Next come platforms for smart contracts. These are systems where you can create automatic agreements without intermediaries. Thousands of applications are built on them, from games to financial services. But all these applications run on tokens, on cryptocurrencies. If cryptocurrencies are zeroed, applications lose meaning. Developers leave, users leave. An entire industry that promised to replace banks and lawyers simply shuts down. Because without a monetary foundation, all infrastructure is useless. Then digital collections collapse. Those very tokens that represent pictures, music, rights to something. Their value was always disputed. But while the crypto market grew, people believed these tokens could be sold for more. Now, faith has disappeared. And it turns out that a digital picture worth $1 million is just a file nobody needs. Collectors lose fortunes. Artists lose platforms. Auction houses that sold these tokens close. An entire cultural phenomenon disappears within weeks. Companies working in the crypto industry start going bankrupt in waves. First, small startups fall. They run out of money. Investors leave. Teams disband. Then medium companies go. Those who gave loans in cryptocurrency, managed funds, provided services. Their business models were based on market growth. Now there's no market. They close, lay off employees, sell assets. Finally, even major players collapse. Exchanges that seemed indestructible file for bankruptcy. Funds managing billions liquidate. An industry that didn't exist 10 years ago disappears almost as quickly as it appeared. But the scariest thing is the impact on ordinary people. Not on traders and investors, but on those who simply tried to preserve money. On a retiree who invested savings in Bitcoin because banks gave zero interest. On a student who bought cryptocurrency instead of stocks because everyone around talked about the future of digital money. On a family that sold an apartment and converted everything to Bitcoin, hoping to move to another country. These people lose not just money. They lose years of life, plans, hopes, and they understand nobody will help them. Because cryptocurrencies aren't insured by the state. There's no depositor protection fund. There's no central bank that will print new money. There's only code, which cannot restore faith. Governments watch this chaos, and many of them see an opportunity to say, "We warned you. Digital money without control is dangerous. Regulation is needed. Protection is needed. State power over finances is needed." And they start introducing new laws, cryptocurrency bans, requirements to register all transactions, control over money movement. What Bitcoin promised to protect against now returns with doubled force. Because collapse created a vacuum, and a vacuum is always filled by power. But let's look deeper. This has happened before. Not with Bitcoin, but with other things people believed in absolutely. Take tulips. Yes, ordinary flowers. In the 17th century in Holland, mania began. Tulip bulbs sold for more than houses. People mortgaged property to buy a rare variety. They believed prices would rise forever. Because everyone was buying, everyone believed. And then one day someone tried to sell, and found no buyer. And in one day, the market collapsed. Bulbs that were worth a craftsman's annual income became worth less than ordinary food. People went bankrupt. Families fell apart. The country's economy shook. Or take the South Sea Company in the 18th century, a British trading corporation that promised incredible profits from trade with South America. Company shares grew like crazy. People sold everything to buy these papers. Even the government invested money. Even scientist Isaac Newton invested a fortune and lost everything. Because there were no profits. There was only belief in growth. When faith broke, shares fell almost to zero. Thousands of people went bankrupt. Britain's economy nearly collapsed. The government passed laws against speculation, but laws didn't return the money. Or remember the early 2000s. Internet companies were worth billions, though they didn't bring a cent of profit. Investors believed in the future. They believed the internet would change everything, and any company with a website would become a goldmine. Shares grew on promises. Then the bubble burst. Over 2 years, trillions of dollars disappeared from the market. Companies closed by the hundreds. People lost jobs, money, hope. But interesting detail, the internet survived. Technology remained. Only faith disappeared. Faith that any website is worth $1 billion. See the pattern? Every era creates its absolute, something people believe in without doubt. Tulips, trading companies, internet startups, Bitcoin. There's always something that seems new, revolutionary, infinitely valuable. And always faith is built on one thing, on the idea that tomorrow someone will buy it more expensive than today. But history always tests these faiths for strength. It asks one question: what if tomorrow nobody buys? What remains? And every time the answer is the same. Reality remains. Tulips remained flowers. Ships remained ships. The internet remained technology. And faith in infinite growth disappeared. Because infinite growth doesn't exist. There are cycles: growth and fall, hope and disappointment, wealth and collapse. And each cycle teaches one thing: value isn't in what technology promises. Value is in what it gives here and now. With Bitcoin, it will be the same. If it falls to zero, technology will remain. The idea of digital money will remain. Mathematical algorithms will remain. But the myth will disappear. The myth that you can create money that doesn't depend on humans. Because any money depends on people, on their trust, their fear, their greed. Code can be perfect, but people aren't. And when people lose faith, even the most perfect code turns into a set of numbers without meaning. Every era creates its absolute, something people believe in without doubt. But history always tests these faiths for strength, and each time the question sounds the same: what remains if everything is zeroed? Chapter 3. Echo. What comes next? A day has passed. Bitcoin fell to zero. Markets collapsed. People lost money. But the world didn't stop. Life continues. The sun still rises. Stores open. People go to work. It's just that now they live in a different reality. In a reality where digital gold turned out to be an illusion, and now they need to understand what's next. The first days after the crash are shock. People don't believe it happened. They check the news, refresh apps, wait for the price to return. But it's not there. Exchanges are closed or operating in liquidation mode. Authorities in different countries begin investigations. Who's to blame? Was this manipulation? Was this collusion? But finding culprits is difficult, because Bitcoin is a system without a center. There's nobody to punish, no director, no board, no headquarters. There are only millions of people who simultaneously decided to sell. And that's not a crime, that's just fear. After a week, adaptation begins. Cryptocurrency companies massively shut down. Exchanges declare bankruptcy. Those who held money on platforms understand nothing can be returned. Legal processes begin. Investors try to prove fraud. But processes drag on for years, and most people simply accept it. They lose money and move on, because there's no other choice. Life doesn't wait. You need to earn, pay bills, feed family. And if cryptocurrencies are no more, then you need to look for something else. Where does money go? Where there's certainty. Gold starts rising in price, because gold is the oldest asset people understand. You can hold it in your hands. It's been accepted for thousands of years. It won't disappear if you turn off the computer. People buy gold coins, bars, invest in gold mining companies. They return to what's been tested by time. The dollar also strengthens. Yes, it's paper. Yes, it's printed by the state. But the state is an institution that's existed for hundreds of years. It has an army, police, courts. It has protection mechanisms. And after the collapse of digital money, this protection seems attractive. Oil, gas, metals, land, everything real starts being valued higher, because real things can be used. Oil moves cars, gas heats homes, metals are needed for production, land feeds people. But Bitcoin? Bitcoin doesn't heat, doesn't feed, doesn't produce. It was a promise, and promises can break. Reality remains, and people return to reality. This isn't regression. It's just a reassessment of what matters. But the most interesting thing happens at the government level. Governments see that cryptocurrencies collapsed, and they draw a conclusion. People need digital money, but under control. They begin accelerated development of their own digital currencies. These are called central bank digital currencies. The essence is simple. Money is digital, like Bitcoin, but issued by the state. You can pay from your phone, transfer instantly, everything fast and convenient. But every transaction is visible to the state. Every transfer is controlled. Every dollar, ruble, euro can be tracked. Governments sell this idea as protection. We won't allow another collapse. We guarantee stability. Our digital money is backed by the state. People, tired of losses, agree. They want stability. They want someone to be responsible. And the state takes this responsibility, along with control. Now every purchase is recorded. Every transaction goes through the system. If the state decides you broke the law, your money can be frozen instantly. No court needed, no bank needed, just pressing a button. And here's the irony of history. Bitcoin was created as the opposite of this. It promised money without control. Money that belongs only to you. Nobody can take them, block them, track them. This was a dream of financial freedom. But Bitcoin's collapse accelerated movement in the opposite direction. It showed that freedom without guarantees is risk. And people chose guarantees. Even if these guarantees mean surveillance, even if they mean control. Because control seems safer than chaos. Through months, the world starts getting used to it. Cryptocurrencies become history. They're talked about as past madness. Documentary films are made, books are written. Stories are told of how millions of people believed in numbers and lost everything. A new generation looks at this and doesn't understand. How could anyone believe in something you can't touch? How could anyone invest money in code? But those who lived through this collapse remember. They remember the promises. They remember the hope. And they remember the moment when everything collapsed. After a year, the picture becomes clearer. The financial world has restructured. Banks have regained lost positions. They're again the main intermediaries through which all money flows. Government digital currencies are launched in dozens of countries. People use them because it's convenient. Fast transfers, low fees, integration with any services. Everything Bitcoin promised, only under central bank control. Less freedom. But there's stability. And for most people, this is an acceptable trade. But some things don't disappear. Blockchain technology remains. Companies use it for logistics, for accounting, for contracts, just without the financial component. Blockchain as a database works well. Blockchain as money failed. And this is an important distinction. Technology can be useful even if its application in one area didn't work. The internet survived after the dot-com crash. Blockchain will survive after Bitcoin's crash. It will just be used differently. Some people don't give up. Enthusiasts try to create new cryptocurrencies. They say, Bitcoin fell because it was imperfect. We'll do better. New algorithm, new protection, new guarantees. Small communities appear. They trade among themselves. They believe in the idea. But there's no mass adoption, because trust is broken. People got burned once. They're not ready to repeat the mistake. Maybe in a generation, trust will return. Maybe in 20 or 50 years, someone will create digital money that actually works. But not now. It's interesting to look at long-term effects. What changes in society when a big idea collapses? Attitude toward innovation changes. People become more careful. They believe promises of revolution less. They check more, doubt more. This isn't bad or good. It's just a reaction. Society learns from mistakes, and Bitcoin's collapse becomes a lesson. Not everything new is better. Not every technology changes the world. Sometimes technology just doesn't work as intended. Financial education also changes. Schools begin teaching children Bitcoin's history as an example of a bubble. They show growth and fall charts. They explain what liquidity is, what panic is, what trust is. A new generation grows up more prepared. They understand money isn't magic. It's an agreement. The agreement works while everyone follows it. When the agreement breaks, money turns into nothing. Bitcoin became a clear example of this principle. New research appears in economic science. Scientists study Bitcoin's collapse as a social phenomenon. How did millions of people simultaneously believe in the same thing? How was this faith maintained? What triggered the collapse? What psychological mechanisms worked? Much interesting emerges. For example, that closed communities formed on social networks where any doubt was suppressed. People convinced each other to hold coins, not sell, believe. This created an illusion of unity. But in reality, everyone secretly thought about exiting. And when someone started selling first, everyone ran after. Or it turns out that many major players knew about problems long ago. They saw liquidity was artificial, that prices were supported by manipulation, that real demand wasn't enough for such capitalization. But they stayed silent. Because while everyone believes, you can earn. When faith collapsed, they exited first, and ordinary people were left with nothing. This is an old story. It repeated with tulips, with stocks, with real estate. Big players always exit earlier. Small investors always remain last. Governments use Bitcoin's collapse to strengthen their power. They say, see what lack of regulation leads to? See what happens when money isn't controlled? A strong hand is needed. State protection is needed. And people agree. Because the alternative scares them. Because they don't want to lose everything again. And the state gets more power over finances, more control over people. The paradox is that Bitcoin was created to fight this control. But its collapse only strengthened what it fought against. After 5 years, this story becomes legend. Youth hears about Bitcoin as something distant, as old-fashioned that passed. Those who lost money have already accepted it. Someone restored finances. Someone didn't. Someone still can't forgive themselves for believing. But life goes on. New technologies appear, new promises, new opportunities to get rich quick. And again, people are found who believe, because human nature doesn't change. Greed, hope, fear, they're eternal. Only forms change. And here we come to the main question. What does Bitcoin's collapse teach? It teaches that money is always an illusion. Beautiful, useful, but an illusion. Whether gold, paper, or code, value exists only in people's heads. When people believe it's valuable, it's valuable. When they stop believing, only material remains. Gold becomes yellow metal. Paper becomes cellulose. Code becomes a set of symbols. Bitcoin promised to create value through mathematics. But mathematics doesn't create value. Value is created by people who agreed to recognize this mathematics. Second lesson. Technology doesn't equal solution. Blockchain is a brilliant invention. But brilliant invention doesn't automatically solve human problems. People will still fear, will still be greedy, will still sell in panic. No code cancels human nature. Bitcoin tried to create a system without people at the center. But such a system can't work with money, because money is a human agreement, and agreement requires trust. Trust in people, in institutions, in force that will protect this agreement. Third lesson. History repeats. Tulips, companies, stocks, houses, cryptocurrencies. Form changes. Essence remains. People always look for ways to get rich quick. Always find something growing in price. Always believe this time is different. Always wrong. Because economic laws don't change. What grows too fast falls just as fast. What promises too much gives nothing. What's based on faith without foundation will collapse at first doubt. But there's also a fourth lesson, less obvious. Collapse isn't the end. After each bubble, the world doesn't destroy. It adapts. People learn. Systems change. Something good remains. After the dot-com crash, real internet companies appeared. Those that create value, not promises. After the financial crisis, banks became more careful. After Bitcoin's collapse, understanding of how digital money works will remain. And someday someone will create a system that actually works. Not through canceling the state, but through balancing freedom and control. Not through faith in code, but through understanding human nature. The world continues seeking new trust. After Bitcoin, this trust moved back to states. But states aren't eternal either. Their currencies also fell. Their economies also collapsed. History knows many examples when national money was zeroed. Germany in the 20s of last century. Zimbabwe at the beginning of this century. Venezuela today. Ruble, peso, bolivar, all lost value catastrophically. If state money can also fall to zero, what's the difference? The difference is in speed and scale. State money collapses slower. The state has support tools, army, laws, taxes, resources. It can force people to accept its currency, can print new, can conduct reform. Bitcoin doesn't have these tools. There's only code and faith. When faith leaves, only code remains. And code without faith is useless. The state can exist without faith. It can force. Bitcoin can't. Therefore, Bitcoin's collapse doesn't mean victory of state money. It only means that the idea of completely independent money didn't work. Hasn't worked yet. Maybe in 100 years, technology will be different. Society will be different. States will be different. And then digital money without center will become reality. But now, in our world, with our people and our fears, they don't work. This isn't a verdict on technology. This is a statement of where we are now. If Bitcoin falls to zero, it will become a reminder. A reminder that no system is eternal while people believe it's eternal. That any value can disappear if agreement about it disappears. That money isn't a thing, but a relationship. Relationship between people who agreed to call something valuable. And this relationship can break at any moment. Bitcoin, dollar, gold, shells. Form doesn't matter. Only one thing matters. Do people believe? Bitcoin's collapse would show the world a simple truth. Money changes, from shells to gold, from gold to paper, from paper to digits. Form changes, but essence remains. Money is what people recognize as money. Today, here, in this society, at this moment, attempting to create eternal money is doomed, because only laws of physics can be eternal. Everything else is agreements, and agreements are revised. So if tomorrow Bitcoin falls to zero, this isn't the end of money. This is a reminder. No system is eternal while people believe it's eternal. Conclusion. We've gone through 3 stages of possible collapse. The first day, when numbers disappear and panic begins. The first weeks, when faith breaks and ecosystem collapses. And the long period after, when the world adapts, learns, and builds something new on ruins of the old. History teaches us that collapse isn't the end, but transformation. It's a painful moment when illusion meets reality, when promise is tested by deed, when faith is tested by doubt. Bitcoin may survive this test, or may not, but regardless of outcome, we'll learn something important about the nature of money, trust, and human relationships. Because money is society's mirror. It shows what we believe in, what we fear, what we strive for. Bitcoin showed that millions of people are tired of control, want freedom, ready to risk. If it falls, this won't cancel this desire. It will remain, and will find new forms. maybe better, maybe worse, but it won't disappear. So the question isn't whether Bitcoin will fall to zero. The question is, what we'll learn about ourselves when it happens. Are we ready to accept we were wrong? Ready to start over? Ready to build something better from ruins? History says, yes, humanity always recovered, always found new solutions, always moved forward. If you found this interesting, hit the like button, subscribe, and write in the comments what you think. Will Bitcoin survive at zero? Or maybe you think it's already invincible, or that collapse is inevitable. Share your opinions. I'm very interested to know what each of you thinks. Thank you for being with me. See you in new stories about money and power.